Gold and silver had a great recovery after the big drop we've seen before and is convincing already some people to buy. But is this really enough? What levels are important to convince even me to buy a position, and what is the best situation to even go short? So let's have a closer look on the charts and see what the market is giving us. Yeah, I've mentioned it. We've seen a strong drop, and this is indicating a really dangerous situation. But on the other side, it was near the low levels we've seen before. And some people are thinking, yeah, well, but we came back already. So is this a good opportunity to buy the market? Yes, it might be a good opportunity, but there are some other aspects we should keep in mind. Not the fundamental one. I'm not a fundamental driven trader. I know some people are saying, yeah, but we have the inflation's risk. We have some other risks in the markets. Of course, the gold price and also silver need to push upwards. And so, of course, it's a good opportunity to buy. But there are some other aspects thinking or making me think of another drop before we can gain for higher grounds here in gold and silver. So what is it, and why is it chart technique what I'm using for my trading ideas? Because chart technique is giving me an impression what the other traders are thinking of. I am not convinced that my knowledge and everyone's knowledge alone is enough to say, yeah, but it's of course the market must be upwards because the Fed is doing this or that, or some of the stock market players are doing this and that. Because of this and that, we need to expect something like this or that as well. But normally I'm thinking of what are the other market participants are doing? What is the flock of traders doing? Are they willing to push the market up? Are they all jumping in? Are they really convinced of doing something? Or are they still shaky in their minds and saying, yeah, to be honest, I'm not so much convinced. I need more input to make me buy a longer term position here in the precious metals area. So let's have a closer look at the chart, because the chart is telling us a lot about the market participants, what they are thinking. Are they really enthusiastic? Are they panicking? You can see this in the chart. So let's have a closer look. So let's start with gold, a short update. We don't need to dig too deep because it's not really important, an important change in the big picture, isn't it? Well, it is a little bit. Let's see what we had after the plunge. We were talking about this strong movement here to the downside in the last video. The last strong drop here was really opening some doors for the lower end of the chart. We could expect that the market even continued through the low levels here, 1675 roughly, which is in March this year, and that the market should overshoot this level here and go even lower for, let's say, something like a 1600 level. Some people are thinking of something like a trend channel, for example, expecting that the market is going here. And even I was thinking this might be a good opportunity here, because this was a strong movement. This was not a really strong movement here. A little bit difficult to recognize, but it was definitely not a strong one. And after plunging through the intermediate lows here, we could expect something even stronger. And I would have expected something like this in a shaky wave to trade short the market for the last movement here into this area, what I typically would expect after such a movement. But there was no way that this is a corrective pattern we've seen here. No, vice versa. It was a strong one. You could see it here. I killed all the old drawings here. You could see that was the response after the drop. The market came back in a strong manner. And this is really, really interesting, because this is showing that the market participants are still there. They are not, the buyers are still there. They are not giving up. They are not saying, no way, we will never buy at this point. In this case, it should look like something like this, in an ABC manner or in a shaky way to the upside. And this would give me the best expectation that the market will continue when dropping through this level here, and then around these levels, what we were talking about before. But in this case, the market came back, and now there's a really, really interesting point. The market came back, overshooting this intermediate high. So this means that whatever is happening now, there's a kind of overlapping here in the down movement. And you may recognize that normally I don't like overshootings. or overlappings in this case, of some chart technical levels, because overlapping means that this is a weak movement. The more this distance is between these levels, the higher is the probability that the market is continuing. But in this case, there is an overlapping, so the down movement is stopped at once as the market was overshooting here, opening a door for higher grounds now. So what can we expect, and what does it need to give us a movement to this level? Because this level is really crucial, because this is opening another higher ground. So we are we have a cascade of nice levels now ahead of us, and all breaks through these levels will open another door for the long side, and more players will come to the long side here and buy to the buyer side and buy the market here and support the bullish movement I'm expecting after the breaks. So what do we have here? Let's go back to the 4-hourly chart, and this is really, really interesting because we have exactly the same situation here on a lower time frame. We had something like a strong movement to the upside. We had an ABC pattern to the downside, and of course, and maybe you were following me and you could see that we went long here at that point, because this is a really typical buying opportunity when the market is giving us an ABC pattern. Maybe you were following me and you could see that, but this is over already because the market did continue, of course. So yes, this is perfect, and as long as the market is staying over this price here, which is the highest point on 9th of August in the morning, which is roughly 1752 roughly. As long as the market is staying above that, we have a really strong market without overlapping. So this is a corrective pattern here. This is not a strong move. You can see this is back and forth, back and forth, back and forth, killing more time than advancing to new price levels. So this is a good one because it's sideways, more or less sideways. It's in a corrective manner, coming back, coming back, coming back. So many overlapping points here. So this is a good one for a fourth correction, or fourth wave in this case, which is a corrective pattern. So you can say it's a first one, it's a second one, it's a third one. It looks like a fourth one now. And you can see these lines here. And we can do this together again, just to give you an impression what I'm looking at. So I want to keep the market above this level here. And I want to see that the market is having a corrective pattern, maybe the same size like this one. Not much more, maybe a little bit less than this one, but roughly this level here. So as long as if the market is staying roughly around this level here, it seems to be the same size here, which is giving me an indication that what we have here is something like a first wave, a second wave, a third wave, somewhere here a fourth wave, followed by a fifth wave, which is still to come. I don't know where it is, and this one is the wrong one. I have to adapt this to this here. So as long as we are staying roughly around the green line here, which is the 100% same size like we've seen here before. It can be a little bit smaller than that. That's also absolutely fine with me, but not too much bigger than this one. And staying above this level here, we have a good chance that this is just the fourth wave and the fifth wave is coming. So you can keep in mind 1760 or 1753, something around this. As long as the market is staying above that, we are still in a bullish mood. And some people may think, when overshooting through these highest level here, then I can trade the continuation to the upside to have the fifth wave, which should look something like this. I'm normally not trading the fifth wave by its own. The reason is because the fifth wave is shorter than the previous wave in most times. Sometimes it's very, very, very long, but in many times it's shorter. So I'm not trying to trade the fifth wave. If I want to trade something around this one, I go to a lower time frame and try to trade the third wave of the fifth. And if I really think so, I can stay in until the end, but not the fifth by its own. Anyway, this is a corrective pattern. This is something I can expect after that. When the market is going through this level, and we can add maybe something like a Fibonacci retracement level, it can be something like a 38.2 level, for example, can be a little bit less, or a little bit more. There's no reason for a certain line. It can be one of them, so don't be surprised if it's a little bit higher or a little bit lower, but it's roughly the idea. Anything around this level is really typical and nothing really special. Of course, it can turn at any time now after the weekend, because we've reached the minimum setback typical for a fourth wave, which is roughly 23.6. It's not absolutely the minimum, but it's a typical minimum. So everything should be okay with this setback here, and a continuation to the upside would be lovely if we can see this. Why is this so important? Because if it is coming out like this, if the market is not plunging through these levels here, then we would have a 5-wave pattern here. And a 5-wave pattern normally is never alone. Especially, there's only one situation, and this is the flat corrective pattern. I just give you a short insight into this one. If the first movement here, or this one here is the same from the direction, it's 1, 2, 3, 4, 5. But then we need something like this beforehand. In this case, this is the C wave, the third wave of this flat pattern. This is the only ending situation where nothing is following after this. It's the third wave, so there is not a fourth wave or a fifth wave after that one, because this is a 3-wave corrective pattern. But in this case, we need something beforehand like this. But we can clearly see this exactly is not happening here. It is nothing, no way that this is something like this. It is coming from here, from very high. So there's nearly no chance that we can errorlessly think of a C wave here, of a flat correction. So in this case, it needs to be something like an impulsive move or like a zigzag move. And these impulsive moves, for example, you can see we have an impulsive at the front end, we have a corrective pattern and a continuation into the direction of the first one. Or if it's not a zigzag, it could be something like an impulse, first one, a corrective pattern, another one, even longer, most times even longer than the first one, then the next corrective pattern, and so on. So both are giving me the impression of a continuation. So if we see finally here a 5-wave pattern to the upside, if this will be the case in a few days or many hours, then after the next corrective pattern, and the next corrective pattern of course can go even below this level. It's no way that this is necessarily holding this. It can be the case that the market is not plunging through this one, but this is a corrective pattern of the whole movement here. So let me draw this here in this case. So then we will have something like an uptrend in a 5-wave manner here. So this point here should be roughly this point here. It's just a guess. Please don't think, he drew this to 1800. No, this is just guessing. I have no clue how far this 5th wave is going. But it might be this around this area, can be a little bit higher, of course. But after this movement is finished, and the next one is something like an ABC pattern, or if it's not an ABC pattern, it might be something like an shaky move pattern like this one, then it's absolutely the very best to think about something like a continuation to the upside. Minimum, the 100%, the same length. So you can just draw the first part. I redo it because it's a little bit too short in this case. So if you have something like this here at the first one, you can do something like this. And the nice thing is you have also an overshooting above this level. Some people are thinking this level might be a good entry for a long position because it's an ABC, a corrective pattern to the downside. So some people are fueling the market with buying orders when the market is breaking through this level. So if the market really is showing us this one, of course, there is a chance that the market may continue. But as long as the market is not going too low against after this one and not going through this level here, we may expect something like a break through this level as well. And we should not forget that we have another, for some people, quite important line. It's absolutely not what I'm drawing. It's from that level here to the highest. You can see we have this one here, We have also from the trend channeling. If it's exactly the same timing, we don't know this. So this is just a guessing. It's not like a cross resistant. It might become a cross resistant here, but if this is a little bit shorter, for example, you can imagine, oh, the breakthrough is a little bit at a different point. So we don't know this. This is just a coincidence that it's exactly at that point here when this is in this length, but it might be in a different length as well. So don't expect that this is necessarily something like a cross resistance here in this market. But all of these levels, this level, the trend channel, and later on this one, will fuel the market with new buying orders, and the market participants are changing to be bulls. And this will finally lead us to higher levels than this one here. So 21,000 or even 22,000 or something. No, not 22,000. I'm really sorry. 2,200. So 2,200. I'm really sorry, but I guess you know what I mean. So this is something we can expect when the market is showing us something like this. So the market changed the picture a little bit more to the bull sides here, but please keep in mind, the first is we need to stay overhead this level here. The second is, after that, we need something like an ABC or corrective pattern. If everything is destroyed when the market is showing us something like this, because this is not an ABC, this is not a corrective pattern, there's no overlapping, this is a strong one. Of course this can happen. It's maybe not the first probable pattern I would expect, but it can happen easily. So if you can see something like this and the market in the aftermath is going up in a shaky way, of course the market will continue to the downside. So our skill as a trader is not to see the future. Our skill as a trader is to see the difference between such a movement and such a movement, and to have the patience to wait for a break. So it's not buying too early, it's waiting. If you see something like this, you can of course buy the situation when the market is pushing through this one. You may remember I talked to you about that before in the 4-hourly chart here. This was the entry for this long movement here. This is exactly the same idea, exactly the same, but in a different time scale here in a daily chart, here in a 4-hourly chart. But it's the same if you have an ABC pattern. And of course, if it's not an ABC, if it's something shaking a little bit more often, back and forth, it is, you can take, to keep it easy, the last intermediate high or the middle one. If you can see there's a bigger corrective pattern here in the middle, you can take the middle one as an ABC pattern, like I've mentioned here before, or you can take, if they're all the same size, you can try the last one here as a trigger to enter the market long. So the situation is quite good here in gold. I'm quite convinced that when, or no, better, if the market is doing this, I'm not sure the market will do this, but if the market is doing this, we can see some really great follow-ups for the long side and expect really high grounds for the gold price. However, we have to have a closer look at silver. So let's switch to silver now and see what is happening here, or what happened here. The good thing is, in the big picture, yes, we have to expect the same situation here on a really big picture. This is in the weekly chart. You can see we had a really strong move from March last year, 2020, I'm sorry. Here in a really strong one, we had a corrective pattern here on the downside. Yes, and we can expect that the market will continue even higher than I drew here. So you can expect that's roughly the same size here from the beginning, and even more than this whenever this is over. The question is, when is the corrective pattern over? We were talking about that I really would like to see a setback around these levels here. To be honest, I would prefer something a little bit lower because it's a little bit more typical. But of course, there's no need to. It's just let's say something like probability that the market should stay or should start from a lower point here, which gives us a lower highs, lower lows here, and this is very often a very good idea for a corrective pattern. So let's skip the daily chart because this is not giving us too much input on that, but the 4-hourly chart is giving us something I really like to show you. The good news is, after the plunge we've seen before, the market came back strongly, shaky to the downside. And to be honest, I was thinking when the market is breaking this level here, it's a good opportunity to buy this market long. It's the same situation like we've seen in gold, because it's a shooting up to the upside, a shaky way to the downside, and this is a typical point to enter a market long. However, the market came down overlapping here, so you could close, if you did something like this, you could close the position roughly around your entry point, because what we'd like to see after that would be something similar to this one. But if you compare, this is something we got there. So this is exactly not the same like we wanted to have. So there was an opportunity, if you were entering the market here at that point, roughly around plus minus zero here, you could close the position if you're on the wrong side, because it's absolutely not supporting the bullish picture here with a continuation and a strong continuation to the upside in this case. Okay, so that's from that side here. And so at that point, it was clear that silver is not in the same mood like the gold price. However, I still see a chance that even silver may have a recovery now, because the overall view of this pattern here looks like a corrective pattern. I make it a little bit bigger so that you can easily see that. If you connect the upper both highs here and connect this, or have a trend channeling line on the lower end, you can see the lower both ends here are really supporting the market around this level here. It's a 20, let's check this, it's a 22, roughly 90, a little bit higher than 90 cents. And so this is a quite good supportive level, because we have a one-on-one projection. It's the same length, this one to this one. We have the trend channeling, which might be the same here in this case with the one-on-one projection, and you have the Fibonacci retracement level here, the 61.8. So we have some kind of supportive levels here. And if this is a corrective pattern and the market is continuing to the upper side, yeah, it's exactly the same we were talking about in gold. Unfortunately, other than gold, the confirmation for that will be a breakthrough this level here, which is roughly, it is the height of 17th of August and roughly around, yeah, short before 2024. So this level here is a trigger for a buying position. Unfortunately, the risk-reward ratio would not be really nice, because this level is very high. This one is really short. So if you just do it the typical way, just measure the first one. Maybe this is a starting point. You can see the minimum target is here, roughly here. But you can see entering a position here with a minimum target of here and having a stop here, or most of you may know that I'm using a 78 level, which might be roughly here. I'm not 100% sure exactly, but roughly here. But you can see the profit is too low compared to the risk we have. So this is not a good trading idea in my eyes, but this is a confirming idea. So if this happens, this is a confirmation, or this would be a confirmation that the bull market is back, and we even can hopefully see something like this in the aftermath, continuation, a 5-wave move, and which will lead us to higher grounds as well. So silver may be a little bit out of sync on a lower time frame compared to gold, but if this will happen, silver and gold would be in the same game again, because they are both on the running upside. So I think we have a good chance that this is happening here in the following, when the market is breaking through this level here. But really, really important, the market for that idea must not drop through this low here, which is 22.179 or 20, roughly 22.20 roughly, because in this case we are still in a bearish mood, and this bearish mood may not last too long, because we are still around these levels here. But I would wait for another confirmation, because of course if the market is just going here and continuing that, you can say, yeah, I keep the losses here, because after that we can expect something more. But what would you think if the market is doing something like this? would you still be happy even if the market is doing this? Later, you don't know at that point. Maybe the market is doing this and you're not feeling well anymore. So as long, of course, if you're having physical silver or gold positions, you can say, yeah, of course, I'm doing this for my grandchild. I can keep this because gold and silver, it keeps the worth more or less. That's a good chance to keep it for the future. But if you're a trader like me, you may not like to sit on losses because you have a margin call, maybe because of that. It's blocking your money for other investments. So I think it is worth thinking about closing a position in this case, or just waiting for a confirmation that the market is really running. So even if the market is breaking here and the market may later on come to this one, I would like to see a confirmation in a lower time frame to say, hey, now that's the right time to enter this. The good point is waiting and having a confirmation sometimes is giving me a worse price than just buying, but is giving me a better opportunity to stop the position so I can have a bigger position size, with giving me a more boom for my money, for my dollars, for my bucks, whatever. And so I think it's worth to think about that as well, but depends on your own trading style. So now you have a short insight what I'm thinking about gold and silver currently. There is a good chance that the market will turn, but it's necessary that the market is not going too low at the current points. Both gold and silver should keep the minimum levels before turning. If they are going below that, the picture is completely different at the shorter time frame. Maybe on the bigger time frame it will be the same, but it may take some more days or even weeks or maybe even months before the market will turn then. So it's good to have a closer look at that as well. So that's it from my side here about the gold and silver. I hope this is giving us a good idea for your own trading decisions. Of course, I don't want to move you to buy or to sell a short or a long position, whatever you like. No, you should do this by your own risk feeling, by your own knowledge about the money you want to invest, of course, but this may help you to find your own trading decisions. I'm crossing my finger that you're on the right side all time in the markets, and looking forward to seeing you again soon. So please stick with me. If you like, join this channel, subscribe it, and give me a like, thumbs up would also be appreciated. Have a good time. See you soon.